asked for in our other budget. I'm sorry, I was looking at the wrong thing. I misunderstood you a little bit, and I apologize.
Okay, I can see the lights now. We have our mics working. See, Chairman, you're 21. We'll turn you off. I don't know who was up next, but I'm going to go with Chairman Hill here next.
Thank you very much, Mr. Chairman. And it's always good when the chairman can see the light. Day's coming. Again, I have, I guess, a little confusion here in several areas, and I'm working now off the budget document on page 19. Starting at 2721 and again at 2741 and 2751, all where you had apparently looked at your own agency and said, well, gee, over here I could reduce some investigators, but down here under insurance regulation I need 3 new, and you had asked for a reduction in some areas and increase in the other, and it appears that the governor's office knows how to run your agency a little better, and they decided not to honor any of those requests. Am I missing something?
Yes, that's basically what I was just talking about. What they do is they order you to, well, you have to redirect some money. And they say, regardless of what you think, and I think OPB does believe they know how to run agencies better than everybody else, and they say, well, we're requiring you to redirect your money from here to somewhere else, and then if you want to, you can redirect it back. And if you don't do that, then we'll just grab money from wherever we want to and redirect it. So for that reason, we actually submitted 2 different proposals. The one proposal that met their technical bureaucratic rules, and then the other one that actually was a realistic budget. And they take the one they like and ignore the other one.
So to clarify that in my mind anyway, if we were to respect your original requests in enforcement, industrial loan, and insurance regulation, I think that's the 3 areas relative to personnel, then that would satisfy you? Would it suit your needs?
No, that's the 2% reduction. So
that's the reduction. That's the reduction that was requested.
No, that wasn't the 2.
With,
excuse me.
Yeah.
No, I'm talking about the personnel themselves. For example, 2721, reduce enforcement program by 4 investigators. That was your request. And again on 2741, reduced by 5 auditors, but yet you increased at 2751 for a new financial analyst. And as that was appears to be your
well,
request,
it was a request with a gun. It was a request
like?
with a gun to our head. It was a request that if we didn't put that in, that they would not even look at our budget. I mean, we were actually told if you don't put that in, then your budget is non-compliant and won't even be considered, and we'll just write up our own.
So do you like what the governor did or what the OPB did? I guess I'm a little confused.
They didn't
Well,
approve anything.
Yeah, the governor
They
did.
a continuation budget for
Yeah.
us, but we had to submit a 2% enhanced budget and 2% reduction budget. So that's what you see in this document on the tracking document. So the 27.21 and the 27.41 is to meet the 2% reduction requirements when we submitted our budget. And then what we submitted for a 2% enhancement was to say this is really what we need, and it is the increase the fire safety program and
So
insurance.
what OPB does is they basically say, theoretically, if we were going to take 2% away from you, where would you want it taken away if 2% had to be taken away? Then they say, theoretically, if we were going to give you 2%, where would you want it? And they require us to give them that information. Then the governor makes a recommendation. The governor's recommendation, which is essentially the OPB recommendation, basically made no changes in those areas. But it's not that we were requesting a reduction. I think that's one thing that the legislature really could look at the entire process, because it doesn't seem to be the best process in the world to say, and definitely I think it's misleading to say it was an agency request. They come to us and say, theoretically, if 2% had to come off the board, where would be the least harmful place? I mean, that is what we're required to say. And to imply that it is a request of the agency, I think is misleading on the part of OPB to say that. I'm not saying they're intentionally being misleading, but to say it's a request is inaccurate. It is misleading. It actually is misleading.
Thank you. May I do a follow-up, Mr. Chairman?
Absolutely.
I'll do a quick one for you. Secondarily, a little over a year ago, the governor started talking about telecommuting and flexible work hours.
Yes.
And we're looking at the possibility as a state of maybe even have a constitutional referendum on a sales tax of some sort that may or may not come up tomorrow. I'm very hesitant when I don't feel that we as a state, as a government, start with, has really, really gotten serious about ways that we can reduce some of this congestion. I do remember the Olympics. We got serious then, and there was no traffic. It was amazing.
It was wonderful. Because
we, not only as a state, but as a city, county, and private industry got serious about this. But we can see what the impact was. And I was wondering, has your agency formalized any kind of plan to really maximize and analyze what you could do if we really knuckled down and said, gee, we want to get with this program?
Yes, I don't have that in front of me because I didn't anticipate the question, but we have a great deal of people on flex hours. Actually, we have a number of people that work until 7 o'clock at night. Those people actually love it because they figure if they get off at 7, they don't get home that much later than the people who got off at 5 with the traffic, and they work 10 hours. They work 9 to 10 hour shifts, so they have certain days off. So their entire days that they're not commuting in the Atlanta traffic. That is one area that we've done. We also have individuals that will spend a certain number of days. We really don't have people that telecommute all the time because it's not feasible, but we have people on different schedules. They may spend 1, 2, or 3 days a week telecommuting, depending on what works better for their particular job. I don't have the numbers of people off the top of my head, but we have numerous people in those various categories.
Well, thank you. You've done a wonderful job. Thank you,
Thank you very
Chairman.
much.
Thank you, Chairman Hill. Does Representative James have a question? You're recognized.
Thank you, Mr. Chairman. Mr. Commissioner, back to your handout and back to the automobile mileage.
Yes.
Now, I know $18,000 a year is a lot of money in one sense, but have you actually figured the cost of gasoline, repairs, insurance, and have you actually sit down and looked at the number of miles this individual is using for work or for pleasure? Because, you know, you're talking about 36,000 miles per year at an $18,000 figure there, and do your employees put that many miles in a year's time?
Angie, why don't you?
Okay, yes, they do. They average, around 140 to 170 miles per year. And yes, we have looked at what it would cost, the return on investment if we purchase those cars versus we continue to pay them mileage in their personal vehicles. And it is when we can purchase a car at $14,000 a year on average, and then we're replacing them, supposed to replace them at 135, which meets the mileage criteria. The mileage, the maintenance, and the repairs is almost not there. So to purchase the vehicles is long term is better for the state.
So the real cost of that car is fuel.
The cost of the fuel
I'm saying the real cost then is fuel.
is fuel.
Okay.
Yes.
Yeah, I
exactly.
think where the state guidelines is you should replace a car at 135,000 miles. How many cars approximate do we have above 135,000?
We have about 8 to 10 cars that are around 170 or more.
170 or more, and the state guidelines say that at 135 we should be replacing them. So we're going way above the DOAS recommendations on when you should be replacing a car.
And in those vehicles, if I can add something, and with those vehicles, we are now, into repairs because, we're having to brakes, rotors, whatever. So those cars that are over the mileage are costing the state even more, which is another reason why we were so thankful that you put the money back in for those two vehicles, because we can only replace about 5 vehicles right now on average, and we really should be replacing like 8 to 10 a year versus 5.
Thank you.
Chairman Smith has a question. Wait a minute, I just turned the wrong one off. What number is yours?
25.
Okay.
You turn it on. Good afternoon again. And I was trying to look over the budget from OPB in the governor's office and also compare it with your actual budget request. And I'm curious, did your numbers stay static for employees, or were you able to add some people? I was looking at 27.3.2, which was some new motor vehicles and a fire safety house, and then another motor vehicle on 27.3.3, and then another motor vehicle on 27.4, and then I did see you got funds, it looks like, for financial analysts. So is there some increase in personnel, or are you pretty much remaining static? I'm just curious.
Actually, our budget didn't change. The governor didn't move forward any of our requests, so our budget.
So those are all zero amounts, and that's what you. Okay, all right.
Yes.
So you had I guess a constant budget from last year to this year.
The
And
only
actually,
enhancement
the
we
year before-
had was, for the last couple of years, has simply been just the standard salary adjustment.
The
rent,
first five
things,
items.
yes, that are kind of automatic, workers' comp, state health benefit plan. Outside of that, in the last couple of years, it has been a zero budget.
So if I looked at the tracking sheet and saw the zeros out beside the line item number, and then I looked at your comparison sheet, is it reflected in both places, or
Yes.
did you show us additionals on your tracking
No,
on your
this is the
sheet?
same thing.
Okay,
We just
that's
showed
what I'm
you a
trying to
summary.
figure out.
Yes, this is just a summary of our requests.
All right, so if they're in here and what you were denied is still showing up in our budget, so we have something to look at when we're looking at just the tracking sheet.
Yeah, when you look at number 27.4, that relates to us asking for the number 5, increase the motor vehicles by 2, and then purchase a fire safety house.
Okay,
And it's
all right.
throughout programs, so it's in the tracking document, it's in several programs, but on our summary sheet, it's just.
So OPB reflected your 2% what-if increase, but just didn't fund it.
Right.
That's what I was trying to figure out. All right, thank you.
And I would like to mention, in case you're not familiar with, the committee's not familiar with what the fire safety house is, we have 3 of those, and one of them has been totally rebuilt by charitable contributions. Of the 3, only 2 of them were purchased by the state. One of them was a gift to the state. So the 3, the state's only paid for 2, and then one of those has been rebuilt by charitable contributions and is about to fall apart again. But these fire safety houses, they get a lot of wear and tear. We go to schools all over the state of Georgia, and we take these to the various districts, to the schools. And Mr. Chairman, I believe you saw one of our fire safety houses, and it's a great tool. It teaches children through action and through going through, simulating, I'm at home, my house catches on fire, I have to evacuate. It's the best tool to teach children, and obviously you don't have one in every school, so we take them around to the schools and run the children through them, and they're a great teaching tool. And that's what the state needs to be doing, is teaching children. And under the law, fire safety education is coordinated through the fire marshal's office opposed to the education department. So that's why we do that element of education.
Thank you. I don't see any further questions. I do have a question of you. We had this conversation about the cars. You made this presentation about the vehicles. I wanted to ask, are all these vehicles, first of all, are they taken home by employees, or do the employees drive into a location, pick up the cars, and then drive them out?
It varies. I think the ones that,
Steve Ross is the only one who comes in, and the chief.
yeah,
Everybody else is
they take it home. They
are home.
because they're people who kind of work out of their
Out of their
house.
home.
I mean, like if you're a manufactured housing inspector, if you're just a home inspector, I mean a building inspector, you get your work assignment on your laptop at your house. You're at home, you go on the laptop, you get your work assignment for the day, you get in your state car, and you start making your calls, and you come back. So they have no office. Their office is their house.
Okay, I mean, I'm not criticizing, just for
No,
information.
but I mean, that's their office is their house. There is no desk that they have anywhere.
Right. And the other question then,
Thank God the laptops. You
Right.
couldn't do that if it wasn't for modern technology.
right, well, considering that, now, are these people located around the state, or are they all in the metro area? Or?
No.
Or around the state.
The majority of them are outside the larger population centers. In larger cities and counties, with the exception of government-owned buildings, a lot of the schools and hospitals. Most buildings, for an example, here in Fulton County are not inspected by my office. They're inspected by the local fire officials because of the large size. The majority of non-government building inspections we do tend to be in very rural areas. So someone may be driving from, Waycross to Jasper to, Brunswick, just driving all around several counties, because especially in the southern half of the state, everything's so spread out. They may spend 40 minutes going from one place to the other because they're having to cross a couple of counties. But that's actually where the majority of these people are in very spread out rural areas that are less populated.
Okay, I don't see any further questions. Thank you very much for coming today. We appreciate the presentation.
Thank you very much.
All right, thanks a lot. Next we have banking and finance. We have somebody, okay, we do. Page 12 of our tracking document. If you would introduce yourself, please.
Sure. Good afternoon. I'm Commissioner Rob Braswell with the Department of Banking and Finance. Tracy Whiteside's our Deputy Commissioner for Administrations, passing out a handout there. We really just have two items. One is an adjustment and the other is an enhancement request. You'll see there on the numerical page one at the bottom, or at the top there, the $181,025. That's to restore the funds to cover the ongoing costs of our phone system. We thank you for on the supplemental budget that was recommended, that was restored, but for it to be permanent to cover the ongoing costs, we asked that it also be, of course, placed back in the 2009 budget. It has had, we have operated this year, of course, without that 181, and it's had a crippling effect on the department. You'll see there under the comments to the right that we've had to hold positions open, delay training, including some of the basic training for our newer examiners. We have eliminated travel to the extent possible. And when I say that, it has had an impact even on our bank examination schedule. Some of the banks that would require a stay out or an overnight stay by our examiners, we've asked our district directors to defer them in the schedule, to push them back till after July 1st, if possible, just because we don't have the funds right now to pay for overnight travel due to the 181 having been taken out of our budget. On the next page is the enhancement, and that's $55,000. We had Department of Audits did a audit of our IT system, and this is to address the weaknesses or the points raised in that IT audit. Some of the things that we are wanting to buy or would like to buy with this $55,000 is an intrusion detection system, environmental monitoring system, fire extinguishers for the computer room, smoke detectors, emergency lighting, and upgraded control access software. And all those things were mentioned or cited in the Department of Audit's review of our IT section. And those are the only two requests or enhancements that we're asking. If I could indulge the committee in just a minute, just to kind of give you an overview of where the department is. If they'll turn to page 3, you'll see the number of institutions we have broken down by the types of institutions there on the left. If you'll notice under banks, starting in 01, we had 267 banks. As of year end, we had 291 banks, and I believe as of today, we have 294 banks. And as you know, a new bank, obviously that's a net increase at year end of 24. As of now, it's a net increase of 27. And as you may be aware, a new bank takes much more of our oversight than an existing bank, just because the examination frequency is much higher, is much faster. We have to do much more coordination. We have to do a charter investigation, that sort of thing, as well as out of the number of institutions, out of that 291 number as of year end, 15% were less than 3 years old, 21% are less than 5 years old. So to give you some analogy, it's the difference between taking care of a toddler versus someone that's 16, 18. You have to do a lot more of the hands-on care with the toddler, of course. You'll see about halfway down, holding companies have increased relatively the same, 236 to 264. Mortgage brokers and lenders from 2668 in 01 to 3,000, a little over 3,000. That's a 345 increase in mortgage brokers and lenders, number of licensees we regulate. But it's really misleading. It's even more than that because 2 years ago, the Primerica agents used to be listed individually, and that was about 420. Now they're listed as one. They're under one Primerica umbrella with the agents. So if you can take that 3,013 number and add about 425 to that, you'll see the additional responsibilities we have. Then if you turn to the next page, page 4, it shows the number of assets, bank and credit union assets under our supervision. You'll see in 2001 we had about $154 billion. As of 6/30/07, which was at the time we composed this, was the latest number available, $275 billion. That's the second largest number of assets under state supervision in the nation. Behind New York, I believe, and California is third. But Georgia has the second most number of assets under our supervision. You'll see in the footnote at the bottom, this represents an increase of supervised assets of approximately 78% from 2001 to 2007. You'll see it down at the bottom also. Our fiscal appropriation increase was 6.5% during that time. On page 5, again, just kind of compare. You see the revenues generated from each of the additional programs that we have. In fiscal year 2002, our revenue was about $17 million. As of fiscal year 2007, it was a little over $22 million. But our appropriation numbers have stayed relatively the same, basically flat. We had an appropriation back in 2002 of $11 million, a difference of about $7 million from what we bring in to what we were appropriated. And now the appropriation is $11.5 million, so about $11 million dollar difference between what we bring in and what we're appropriated. And the last page is kind of the graph that indicates the growing disparity between what is brought in versus what is appropriated. Just wanted to give you an idea of where we are today with that 181 that was cut out from us. I have likened it to I've used this a couple of times, but that we were on a hamburger helper diet beforehand, and now we've been eating ramen noodles this year. And so we want to go back to the hamburger helper at least, if we may. So, and I'll be glad to answer any questions that you may have.
All right, thank you very much thank you for your presentation. We do have a question. Chairman Mills, is that? Oh, okay. Representative Houston.
It looks like y'all the only for-profit agency we have in the state. I had just 2 or 3 little questions. When you talked about the mortgage company that used to be under one, have like 400 different agents maybe, and now they were under one umbrella. When you charge a fee for these mortgage companies, is it done a sliding fee about how many, just because if they had 400 agencies put under one, do they pay more than if they were just listed as one? Or how
They do, and that was part of that legislation. And it's been 2 years, and I can't remember exactly how the scale is.
But you do it on a sliding scale.
It is, exactly. And depending on the number of agents that work under them, it goes to a different threshold.
Have your fees gone up that you have to pay to be licensed in here since 01?
They have not.
So you haven't, we haven't looked at your fee schedule. I was thinking about the check cashers, how it's increased almost three times. I wondered if we had changed the fees.
We have not. As far as the mortgage broker and mortgage lenders, I'm sorry, is what I thought you were referring to.
Well, I was just looking at all of the whole fee schedule.
Well, we did have actually an audit of our fees this past year, and they were very close in most regards. The place that was different was that in the mortgage side, we're collecting significantly more than we're actually utilizing to oversee the mortgage division, mortgage entities.
What about your check cashers?
Those were pretty close, if I remember correctly.
Okay. My next question, but this is not about the budget, just something I wanted to ask you.
Mm-hmm.
What banks in Georgia do we have that have their headquarters here, that are really a big regional bank that are domiciled, that have the headquarters in Georgia? I know it's SunTrust and Synovus.
That's correct. There are two largest.
Are there any other large banks in Georgia?
Well, it depends. Your definition of large, United Community Banks up in Blairsville, Georgia, is about a $7.5 billion operation. Gainesville Bank and Trust, and Gainesville, of course, is about to be purchased by SunTrust, but is a several billion-dollar organization.
Okay, but SunTrust and Synovus are too big.
Yes, ma'am.
Okay, thank you.
Chairman Mills, recognized.
Thank you, Mr. Chairman. Commissioner, again, thank you for what you do, and you do produce a lot of revenue for the state. I was just curious. I know that a lot of these areas we've gone up in more people doing business, particularly as you cited, the mortgage brokers and lenders. And I noticed that you had asked for 2 more mortgage examiners on 14.5.2 on page 13 in our budget. And, of course, I'm assuming, like most of those other examination and regulation examiners, that's not that you do it for the reason to produce revenue, but that's a revenue-producing position that pays for itself. Is that not correct?
That's correct. The mortgage division, the revenue from the mortgage entities and the 650 fees totals about $6.5 million. The amount of resources that we are appropriated to give toward the oversight of that is approximately $1.5 million. So there's about a $4.5 to $5 million, if I'm correct. Right, 1.79 million. So there's about $4.5 million excess that we collect from the mortgage entities.
And with that in mind, if I could follow up, Mr. Chairman, I'm just curious, what was the logic behind the governor's recommendation of recommending nobody when the industry's increasing? It brings in more revenue. It pays for itself. I'm sure there was some reasoning there. I'm just trying to get at it.
I'm not aware of the reasoning other than I know there were, we tried to make a compelling case, and I think we did, but I know there were other, priorities and pressing issues that with limited funds, the state funds, and so we were told we just did not make the cut in regarding that enhancement.
Could I, Mr. Chairman?
Certainly.
If you could just help me out on this budget, and again, I'm still learning with the budget here, but let's just walk through one, for example, if we could, on page 12 of the tracking document. It comes to the agency, and you recommend on 14.2.2, we'll just pick that one out. The agency recommends $390,000. Then it goes to the governor. I'm sorry, you recommend cutting. Is that correct? You recommend cutting?
That's a reallocation there. The way the budget was originally sent out to us or proposed, I believe was it 83% of the funds for personnel services went to our smallest division, which has 4% of the people. And so that is part of the reallocation that we have asked for. We asked the governor for, and they complied with us and gave us that reallocation.
Okay, and if we're going out to the governor's line, you recommended $390,000, and then the governor recommended that you cut less, and that's what I'm trying to figure out because this is throughout these documents, and I'm sure that certain items are being shuffled around. I'm just trying to understand it.
Right. I'll let Tracy answer that.
Basically, on this item, the governor didn't change the amount. I know that it appears as such because through the process, the governor actually let us change the amount as we had gone several months into the process and saw that the money needed to be allocated slightly different between the programs. So the total dollar amount that we're reallocating just changed between programs, but the total dollar amount did not actually change.
And is that true for each one of these cuts, or is there actually an area where you recommended a cut and then the governor's office recommended, well, maybe you shouldn't cut quite that much?
We did, as Commissioner Oxendine mentioned, we also have to propose a 2% reduction, and that is in the 14.3 section. We are such a lean agency, and we are extremely tight, as I mentioned earlier, that to get to 2% reduction, the only thing that we could propose is to eliminate our legal and consumer affairs section. It would be to eliminate our consumer affairs call handling specialist, and that would be 3 individuals. The governor did not want to do that, and thankfully, and so we agreed that we didn't want to do that either, but that was the only thing that we could propose to make a 2% reduction.
I'm sorry, Mr. Chairman, last question.
Oh, go ahead.
If we were to, and this may be a hard question for you to give a direct answer to, and I understand that, but if we were to budget $105,000 to fill 2 positions for mortgage examiners, approximately how much, based on averages, would those 2 examiners bring into the state in revenue?
Additional examiners would not bring in any additional fees on a set basis because the number of entities would be the same. However, we do have a significant number of fines that we collect, and so that would be that many more examiners, 2 more examiners out there doing exams and most likely imposing fines. Just to give you an idea, more than 50%, probably close to 65 to 70% of our mortgage examinations result in administrative actions against individuals. We risk focus our program, and so we're going into those that we have suspicions about, and so the fines, therefore, are pretty significant as well.
Okay, that's your question. I think it's Chairman Calvin Hill has a question.
Thank you very much, and thank you again, Commissioner. You've done a wonderful job here, and your agency always does. I guess we could call it a cash cow. It does bring in the revenue, and we appreciate that.
Well, thank you.
But following up on Chairman Mills' questions on the mortgage supervision, I also noticed that the governor's office did not concur with your request to fund a vacant bank examiner position. With the growth in banks, again, was any justification given, or this is just something that was done?
No more justification than we received on the mortgage side. That's something that we will be readdressing again next year, especially with the downturn in the real estate market. Obviously, our banks are having a very challenging 2008 with their past dues increasing significantly because of that.
It seems like this is a year that you need them more than ever with all the challenges in both the mortgage and the real estate and the banking industry. Okay, and then I'll kind of ask the same question that I did of Commissioner Oxendine, but in the telecommunicating, and I think the governor at one time called his whole program the Work-Away program.
Mm-hmm.
What, besides the examiners in the field, as you described earlier, but what has your department done for the other people? Have you considered the 10-hour work weeks or work days for some people, et cetera?
We do. In fact, I'm pleased to announce we're one of the, I think, most aggressive agencies regarding the Work-Away program. I think over 92%, if I remember right, of our employees telework at least one day a week. We save each month, I believe it's somewhere between 17,000 to 18,000 miles not traveled because of teleworking, as well as we've allowed those that perhaps can't telework to do the 9-hour or 10-hour flex days. Our main office does that. We've been very aggressive. Many of our main office staff members are able to work at home 2 days a week as opposed to 1 day a week. We're finding out that production has actually increased by doing that. So we're real pleased. It's a non-compensatory way to increase morale, to increase production, and as well as to keep people off the road.
That's excellent. And as I continue in my discussion looking in that direction, would it be possible for you to perhaps produce some sort of just a little recap of that?
Sure.
I think it's excellent what you've done. We want to commend you and your department.
Oh, sure. Be glad to.
Thank you.
We'll get that to you.
Thank you very much, Mr. Chairman.
Thank you. Chairman Williams. Banks and banking has sparked an enlightening, spirited conversation here.
Thank you, Commissioner. And I want to go back to the mortgage fiasco that the whole country finds itself in. And I know you've been aggressive in that area. Mm-hmm. Do we have a handle or your arms around the problems we've got in the state in ferreting out the wrongdoers? My concern is people are being foreclosed on when really, when you go back and look at it, they've been duped into something, and I'm afraid these guys that did it have walked off and no accountability at all, and that really concerns me. Are you actively pursuing, and these people that you feel like has violated the law, or any criminal charges or anything against them to recoup some of this these exorbitant commissions and all that they've reaped off of this thing?
Right. Well, we continue to make referrals to law enforcement agencies as well as other regulatory agencies to try to put the bad players out of the business. From 2003 to now, Georgia, going back to 2003, was our mortgage fraud index was 5 times the national average of what it should be. That's the same year that we instituted the risk-based focus of our mortgage examination program. Also started working very aggressively with other individuals, whether it be law enforcement. We've done teaching exercises with different law enforcement agencies. We worked with David McLaughlin regarding the mortgage fraud law that was passed by the legislature, which was a great law and has been, I think, requested to be duplicated in many other states. We've worked with a grassroots coalition called GREFPAC, Georgia Real Estate Fraud Prevention and Awareness Coalition. And through all these collective efforts, each year that mortgage fraud index has continued to decline. It went from 506 to 425 down to 300 and something. And then last year, we were pleased it got down to 125. And to give you some perspective, 100 is where they anticipate all states being based on the number of loans they close, mortgage loans. So 100 is kind of the target number you're going to. We're at 125. And our goal this year, internal goal, was to get it to 100. Let's go ahead and put that final 25 down. Well, we've gotten a tentative word from the people that calculate this that we're still at 125. So we hung on to 125, but which is a little disappointing. Didn't go down further, but at the same time, other states, most of the states in the nation, increased. So we felt pretty good that we stayed where we were, considering everybody increased. We have gone from being number 1 in mortgage fraud to number 4, and now we're told that if it comes out in a couple of weeks, right now we're 6. So we're pleased with the progress we're making. Obviously, we want to get even further. And then recently, regarding some of your question regarding the foreclosures that have gone up so tremendously lately, we have worked through our national industry trade group, the Conference of State Bank Supervisors, to do 2 things. One, to participate in this nationwide mortgage licensing system, which has passed the House and is currently over in the Senate. So we're real pleased about that, where you can track the bad guys or bad girls when they move from state to state and prevent them from coming into your state. And number 2, we have also worked through them to help us identify, and they gave us a list just recently, the brokers, I guess, that had the most foreclosures associated with their loans. So we will know if they weren't already on our suspicious list, they are now. And so we have put them and integrated them into our suspicion list. And so we are trying to aggressively go after those individuals that have been most associated with foreclosures.
Well, I appreciate what you're doing, because I know it is a problem. I'm glad to hear you're being aggressive at it, and hopefully we can get this problem solved as far as the state of Georgia is concerned.
Well, thank you.
Thank you. Number 25, Chairman Smith, is that you?
Thank you. Good afternoon. I'm learning a lot today. Thanks for your presentation. I'm curious about another aspect that goes to your international terrorism and money laundering. What role does our state bank examiners play in tandem with our federal examiners, or how is that working? Because I know it's a much higher profile now for banks than it used to be.
Right. They have a lot of BSA, Bank Secrecy Act procedures that they must follow, and our bank examiners ensure they're complying with that on our examinations, just as the federal examiners do that. We have, of course, a reciprocal agreement with them, and we go in tandem, I guess. alternating examination cycles. We're also part of the FinCEN network, Financial Crimes Information Enforcement Network, in which we can look up individuals to see if they are on the terrorist list, that sort of thing, as well as there's the another acronym, SARS, the Suspicious Activity Report, that banks must file under certain requirements. And of course, we have access to that as well with the federal regulators.
There's just a lot of burdens we're putting on our your industry and what you must do. So I think I'm joining in with others saying if you do our best to get you more personnel where we can.
Thank you very much. I appreciate that.
All right, thank you. If I can turn this one light off. I don't see any further questions. We appreciate you coming today. Appreciate your presentation. Thank you very much.
Thank you very much. Thank you, committee.
Do we have anybody here from the merit system? Okay. If you would introduce yourself, and if you have a presentation, we'd like to hear it.
Anybody?
Okay, thank you.
I am Deputy Commissioner Lee Rudd. Steve Stevenson, our commissioner, is actually traveling today, so this is my first chance to meet with all of you distinguished folks. I passed out some information for you. There are actually 2 pages. I believe some of you probably got the same information during the 2008 amended discussion, but I did want you to see, number one, how our budget is allocated amongst our programs. And then on the second page is the 4 areas of focus that we're looking at as an agency for this year. We are self-funded, and as such, we don't get any state funds. So if you refer to the governor's tracking sheet, we anticipate an increase of funding requirements that will take us from $13.7 million to roughly $14.2 million. Are there any questions on the funding?
Looks like we do have a question. That must be Chairman Calvin Hill, I believe. Recognized.
Thank you, sir. Again, I'd like to repeat my question I've had for the other departments is what are the plans this department has for the Workaway program? What's in place and what's intended?
Be glad to tell you. We actually administer the Workaway program as an agency, and as such, we need to lead by example. So we have a significant number of our employees who do participate in it, and we encourage that. Frank Heine, is there anything you would like to add about the Workaway?
I'm Assistant Commissioner Frank Heine of the State Personnel Administration, and the Workaway program reports directly to me, and we do the reports monthly to the governor. We've actually reinvigorating the program. We've kind of hit a level of kind of plateaued, and now reinvigorating it with some challenges and some new incentives for the agencies as far as recognition. We've participated in the Joint Study Committee this summer on teleworking, and actually have partnered with the Road and Tollway Authority on the Urban Partnership Agreement, and actually would be the pilot agency and coordinate that for the U.S. DOT grants if those become a reality.
Wonderful. In fact, Frank, perhaps you're the person I've been looking for all day.
Okay.
Is there some sort of report on how every department within the state that you might have something? Maybe even give me year after year so I don't have to catch everybody flat-footed today?
Chairman, every month the agencies report to us. We consolidate that and send that to the governor and the agency heads, and we will be glad to get you a copy.
I would love to be copied not only this month but on an ongoing basis because it's a large concern.
Not a problem at all.
Thank you so much, sir. I really appreciate it.
Well, I'm glad we could answer that then.
I don't see any questions right now. Did you have a further presentation?
Unless you have anything else,
I don't see any further questions. We appreciate you coming today.
All right, appreciate being in front of you folks.
We have asked DOAS to come back today. I think I saw there he is. Page 9 on the tracking document. We'd ask you to come back today. There were some issues, I think, that we wanted to revisit. Did you have anything you want to say to us before we?
No, sir. We were of the understanding that you all had some additional questions for us, but we're unsure as to what they are.
Right. We had, I'm going to make sure I get help here, but I know we wanted to ask you about the, in the 2008 budget, when you came for the presentation, you had mentioned to us, we talked about what had happened when the 2008 budget was actually put together, the 2008 general budget last year. And you all were short some funds, and you had requested, I think, around $1 million, and we'd put in, I think, how much? $400,000 in the 2008 amended budget that we had put together. And as I recall, the committee had asked if there was, rather than us putting in and finding, or, when we say find, of course, that means we've got to pull it from someplace else, some other agency or whatever. Instead of us doing that, was there any way that you could move money from the purchasing division within DOAS? And we recall that the answer was no, that there were a lot of issues, including some statutory issues involved in that. But then it's my understanding that in the Senate version, and then when y'all went to the Senate, that in fact that's what they did, but that y'all had basically said, yes, it's okay to do that. We can move that money. And of course, when they did that, they moved, I think, the $800,000. Is that correct? Mm-hmm. The $800,000 within your agency, and that took the $400,000 that we had moved from some other agency in there, and that's just out in their version of the budget someplace. So if you could comment on that, we would appreciate it.
Yes, sir, I'd be happy to. My understanding of the Senate's direction is that they had recommended that it was roughly $882,000 be taken out of P-card rebates that existed within the purchasing division. Right. And we had legal opinions both within DOAS as well as from the AG's office, from the law department, that we would be precluded from using those funds, which were set aside to, within the legislation, we believe, set aside specifically to support the purchasing function. And so our recommendation was that we felt like that the state was precluded from using those funds to shore up another division within the agency. Our recommendation was that since there were going to be some funds within the purchasing group which would ultimately result from hires which have not yet been made but are being made as we speak and will throughout the rest of the year. In other words, we have certain hires to where we haven't incurred a full 1 year's worth of salary, where hires are still being made because we've upped our standards for the skill sets within purchasing, to redirect funds, if the legislature authorized us to, from purchasing, state appropriated funds from purchasing over to the administrative budget to cover that shortfall. And I don't know the outcome standing here today as to whether or not that recommendation was taken. I have not heard the finality on the 2008 budget at this point.
Well, I don't know about that. There is no, at this point, as we sit here right now, there is no finality on the 2008 amended version of the budget.
Okay.
I mean, what we have is the version that we put together in the House, our version of it. We have the governor's version and we have the Senate's version, and of course that's what I'm speaking of. When the Senate had put their version together, they, in regards to that $800,000 and the $400,000 that we had put in, I mean, it's a different version, which is certainly their prerogative to do that. And some place or another along the line, before we all leave here, that has to be brought together. But it would have, and I do recall now specifically, now that you've mentioned, I do remember specifically somebody in the subcommittee had asked about about that money that had been brought in from the P cards, and we had a presentation, I think, also from others in the department, how it couldn't be done that way.
Yes.
The reasons why it couldn't be done, but it was my understanding that when y'all went to the Senate, it was basically a different story. That yes, that to get the $800,000, you can do that. And
No, sir. We have made the exact same claim to the Senate that we have made to this committee, and I believe we may have actually copied you on the letter to that committee stating such, and with this opinion that it could not be pulled out of those P card reserves.
Okay. Any questions from subcommittee members on this particular issue? Okay. There's another issue, but before I get to that, I want to make sure that now we had just we spoke also during that 2008 amended budget process about the money that for the former prisoner that we had approved the compensation resolution for last year.
Yes.
And that was some money I think that we had through the process last year at the end of the year. Somehow that money didn't get in the budget for DOS, and I think we put some money in over here. Explain to me. I mean, this is just for information because I can't recall how we passed that resolution last year. We just passed another one this year for another prisoner that hasn't been approved by the whole House at this time. But when we say an annuity, what exactly does that mean as far as, I know what an annuity is, but from your agency's perspective, is that us putting a certain amount of money in the budget every year and then that being the payout that particular year for that person? Or how does that, you're not buying an insurance policy or anything like that?
Sir, it's a financial instrument that we would actually go to the financial markets and purchase to ensure that cash stream, that agreed upon cash stream of the payout amount over the approved number of years. I believe this payment, Charles, if you'll correct me if I'm wrong, I believe it was for 15 years, the total payout?
Correct.
So it was a purchase within the financial industry to have an upfront payment. And basically the way the financial industry looks at this is it's a gamble on their behalf because they're going to take the upfront payment, the money, and then they're going to pay a stipend over the 15 years for each year and equal installments. The variability in the pricing comes from the fact that the financial markets, as we all know, have been in a tremendous state of flux. And so when our risk management division goes out to the market, as we have done now on numerous occasions, to get the current price for an annuity as of today, that quote is only good for 7 business days. And because the financial market is saying all bets are off if you don't lock in, if you will, during the 7-day quote period.
So the one for the one we approved last year, that compensation resolution for the $1.2 million for the falsely imprisoned person last year. So how much did that cost? There was a one-time cost. Is that right? That you purchased this with. So how much money was that?
There was first of all there was an upfront payment that was due the gentleman, and that was $200,000.
That's correct. $200,000. $100,000. $100,000.
Okay, so $100,000 was the initial installment.
We bought a $200,000 annuity for medical benefits, which was around $137,000, and then we're in the process of trying to purchase a $900,000 annuity, and that's the one that's constantly going up that we're currently underfunded.
That'll be the one. The $900,000 balance, Mr. Chairman, is the one that'll be paid in equal installments over the remaining period.
Okay. All right. Well, what I'm trying to get a handle on here is if we pass this one that's before the General Assembly right now, which total it's $1.2 million. Also, I'm trying to get a handle on how much that would need to be in the 2009 budget. That's really where I'm going.
What we would need to do is we would, as we did last year, provide the committee on both sides, both the Senate and the House, with hard copies of estimates from the financial market.
Okay.
We would recommend that since this process doesn't necessarily occur, the process being the budget process, necessarily occur within a 7-day period, and obviously we're unsure as to when this session will end, we would more than likely ask for some buffer above that to compensate for any fluctuation in the financial markets. What we would do is a separate budget line item would be set up for this, and this would be its own program area. We would provide all of the documentation for purchasing the annuity back to this body or anyone else that would want it, and any excess funds would be returned immediately to the Treasury.
All right.
But what I really don't want to have to go through is having to come back and say, you gave me precisely what this quote says, but you didn't allow me to buy it within 7 days, so therefore now the quote has changed after 7 days, and we have to go through the gyrations again to get the extra money. Because it's set up in a program area, I don't have any other funds to put toward it.
Okay, thank you. I appreciate that.
Mm-hmm.
Thank you very much. Yeah, there's another issue I want to make sure we get to, but we do have a question. Chairman Hill.
Just as a follow-up, Mr. Chairman, thank you very much. In that light, and we do understand and appreciate the volatility of the financial market and purchasing these instruments, but on the tracking document on page 10, under 1214.1, we're deleting a one-time cost of purchasing an annuity for one of these people. I'm trying to figure out, as you said, we're trying to put money in to have, and perhaps even a little more with an extra buffer, but here it shows a line item deleting that, and I guess I've got a little confusion as to what that's referencing.
This was the money that was allocated last year, and the 825 that you see, sir, is less money than what we called for. We actually called for, I believe it was either 875. It was well above this number, and that number was shorted, if you will, through the budget process, even though the quotes that we had backed up our position as to what this annuity would cost. For whatever reason, and I haven't found a satisfactory reason, to be quite honest with you, less money than what the actual quotes from the brokers within the industry provided us was allocated to us. So what we asked for the 2008 supplemental was the balance over and above. And what has happened throughout the year is that with the financial instability in the markets, the original undercut amount has grown by some $50,000. And so what we've done collectively as a body is we've cost ourselves $50,000.
Okay, but I don't understand why we're deleting or taking away from you an additional $825,000.
Because it was a one-time allocation that what we're looking at here is 09, so it was a one-time allocation for 08 coming out for 09.
I hate the way we do this. Thank you.
Okay. Did that answer your question, Chairman Hill?
Yes, thank you.
Okay, I think the next was Chairman Roger Williams. Okay, he's passing. Number 28, is that, okay, Representative Houston.
I'd like to address on page 9 your risk management. The audit we got from Department of Audit in May of 2007 about your loss controls related to state insurance claims, and then the follow-up on the audits we've got, the auditors felt like if we could reduce these claims by 5% on insurance claims, that we would save $5 million a year. And under risk management, I don't see any place where you've hired a risk management, or how do you propose getting that $5 million savings, and how do you address the audit? What do you do? You know, other states, ours went up 9%, our workman's comp, when other states had implemented things, as you can see in the audit, to make their workman's comp go down.
Yes.
What can we do to take care of that $5 million savings?
Well, let me, if I may, address the audit first,
Okay.
and what we're doing in response to the audit. We worked very collaboratively with the Department of Audits on this particular audit. We felt very passionately and strongly about loss control. Loss control had been, my understanding, I've been with the state now going on 3 years, and loss control had been an integral part of the DOAS risk management operation years ago, my understanding is. And at one point, I believe budget constraints caused that particular function to go away. My personal opinion about that is that we probably didn't have the appropriate measurements at that point to adequately defend the loss control function as it had been in place within risk management in years past. What we
Wait,
have,
now, are you saying budget constraints made you cut?
I'm saying years ago, well before I arrived on the scene. Most, if not all, insurance operations have dedicated loss control personnel,
Right.
and that's what this particular audit is calling for.
Yes.
What we have done recently is we've just hired a point person. The gentleman comes from the city of Houston, which is, I believe, the third largest city in the country. And so that's a microcosm of the state of Georgia. A gentleman by the name of Ted Lowe, who is our chief loss control and safety officer to head up this function. And so we have already had loss control in place among the 4 major lines of business within risk management, which are liability, the auto program for vehicle coverage, as well as our property program and workers' comp. But it was being done piecemeal, to be quite honest about it, by each of those 4 individuals who was heading up those insurance lines. This effort in this particular position will bridge across all 4 of those lines, and loss control, for the most part, is an effort to communicate, edify, and train state staffers on what not to do to mitigate or eliminate a claim altogether. And so what we've done is we've gone to the market and gotten classically trained loss control professionals and put them back in place in an existing position within risk management by restructuring the function. So we didn't ask for any new positions. We eliminated functions and put this position in place because we felt like it was critical. So that's been the first step that we've taken for the audit.
So the audit says that since we don't have to fund a position, are you telling me that we should see a $5 million savings in our losses, so we could take a $5 million?
Well, already, if I may, we're taking a look at a 4.1% reduction in our overall budget for 2009. I'm not sure you were present for my last hearing in front of this body. In fact, I'm pretty sure that you were not, so you didn't have the luxury of some of the information that I'll provide to you here.
Oh, I'm sorry I wasn't here.
That's all right.
I just read the audit. I didn't know you'd addressed this audit before the committee before.
Not the audit, but the actual results within risk purchasing. There's about a $7.5 million savings within the budget associated with risk management. And you have to understand that those are internal funds. Those are not state appropriated funds, because the way risk management works is by applying premiums out to the agencies and universities. And so they're classified as other funds. But we've done a tremendous job in terms of negotiating lower premiums from the carriers due to the loss control efforts that we've had in place, both at the time that this audit was performed, which was the middle of last year, as well as since that time.
So what are you doing about your claims? Your payment of claims? Aren't you self-insured on, say, hospital? On some of your claims.
We are, and already
workers' comp, self-insured.
Through the first 6 months of the fiscal year, we've had a 17% reduction in the number of claims and a 32% reduction in the value of the payouts thus far in the first 6 months of the fiscal year. So we're trying to duplicate that for the second half. And where that will show up will be lower premiums if everything else is the same, lower premiums charged out to the agencies on a go-forward basis based on their loss exposures being less and their claims history being less.
Okay. Thank you.
Yes, ma'am.
Thank you. This is one of the other issues that we wanted to discuss with you. Explain to me now. I didn't realize this is pretty educational. I didn't realize that. I know that basically we have a self-insured situation, but it's really that the DOAS is acting as the insurer. Is that correct?
Yes, sir.
And charging premiums, and that's where your money has come in through. How long does this go back? Forever, or how far back does this go?
Sir, I'm going to have to defer to some of the veterans in state government here with me. Joe or Charles, would you be able to address?
It's been decades. For example, the liability fund, the State Tort Claims Act, was passed in 1993, which sets up the liability trust fund. Even before the Tort Claims Act, there was an employee liability trust fund, which goes back to, I believe, the mid or late 1970s. The workers' comp program was started in the early 70s and has been in place since then.
As far as these premiums that the department charges to other agencies, if I'm understanding it, who sets those premiums?
DLAS sets those in conjunction with OPB.
So really, as far as what the state has paid out, I mean, there really hadn't been any real incentive then, has there, for them to be low? As long as you can raise the premiums to those agencies and the agencies are appropriated money through the General Assembly, I mean, I'm not trying to put you on the spot, but isn't that true? I mean, there wouldn't have been any real incentive to.
No, sir. OPB is a very strict filter for us, and so they understand that if those agencies are increased arbitrarily, that those funds obviously take from other funds that those agencies would have. That there's not an unlimited set of funds. What we're trying to do now is we're trying to set up incentives and disincentives for the agencies based upon their adherence to standard loss control programs. For instance, an agency that continually undergoes repeated losses of the same type, and they come to our training, and we administer loss control remedies to them, and the trend continues, that's a clear indication that they're not partaking of the medicine, if you will, to stop those types of claims or mitigate those types of claims. Those agencies will either incur a higher deductible, which would hit their operating budget, or they would incur a higher premium versus an agency that's doing a good job mitigating risk, subsidizing the agency who's not doing a good job mitigating or eliminating their risk. And so just like all of us do not have the same premium, if you will, to drive our car if we're all insured by the same carrier, it's dependent upon how good of a driver we are, whether or not we've had training and so forth. So those issues come into play.
Okay, well, I'm going to give you all I certainly value what you do, and I respect what you do. I want to give you the department benefit of the doubt. It would seem without some kind of as an insurance company has some regulations and some oversight, it would seem that there's no real oversight. But we do have a question. But before, if you would just let me do this, committee. How much money then has been brought in fiscal year? Well, let's just say fiscal year 2007. How much money was brought in through those premiums to the other agencies? Number one, and then how much is in your pot? How much is in that account right now to take care of claims?
Sir, if I may, let me defer to Charles Petty, who's our finance director, and can speak specifically to the risk management reserves, and with particular note being made to the particular lines of business within risk management, as there are some differences in the health of those funds, which Charles will point out for us.
Okay.
Thank you. Just as a little bit of informational background, annually we have an outside firm, PricewaterhouseCoopers, come in and perform what's called an actuarial study of our risk management operations. And from the existing claims that the state has, they project out funds needs to pay out those claims on June 30th of each year. The last full billing that we did for the state of Georgia was in FY02 and FY03. We have not billed for the liability program, and the current funds in that liability program is $150 million. And then there's an actuarial amount, which it's projection of $117 million. So by not billing for fiscal year 08 or for fiscal year 09, we will bring those funds down. Hopefully we'll still be within actuarial compliance, but there's a chance that those funds will go negative. The workers' comp program currently has, at year-end FY07, $31 million in it. The last full billing for the workers' comp program was in fiscal year 03, and we billed $80 million for that year. For fiscal year 08, we billed $65 million. And that's the first time we've billed in that program since that year. Yeah, I do. In the actuarial review performed by PricewaterhouseCoopers on the workers' comp program, they're showing if we closed all claims as of June 30th and just had the funds sitting there to pay out, we would need $215 million in our trust fund today. What we have in that fund is $31 million. We have an actuarial shortfall of $184 million. And this is something that comes up annually that the State Accounting Office, the auditors look at. The people who finance our bonds, they look at this very closely. So for the first time in many years, we're beginning to start the billing process again. As far as the property program goes, we've got at year-end approximately $24 million in that program. That program currently runs cost-wise about $20 to $24 million a year. But let me give you one caveat. There's nothing in that program in event of a catastrophic loss. Today on Georgia's coast, we have approximately $1.5 billion. Help me out here. Thank you. $1.5 billion in assets, of which 1.2 or 1.3 billion of those assets actually reside in the Georgia Ports Authority. If we were to have a catastrophic loss today from a property standpoint, we would only be able to cover approximately $140 million. Insurance, a couple of years ago before Katrina, the state of Georgia actually carried $1 billion in property coverage. Because of Katrina, and I know the commissioner can speak better to this than I can, the amount of coverage we could secure for the state of Georgia dropped dramatically. In fact, last year we were down to approximately $115 million. Because the commissioner and risk management went to the market, we were able to get roughly a 22% increase in coverage last year, but that only took us from $115 million to $140 million. So within the property program, should there be a catastrophic loss, we would be grossly underfunded. The other programs that we have is, I've mentioned the liability, workers' comp. We also have an unemployment program that we cover the unemployment insurance for state employees. At year end, that program had approximately $8.5 million. The interesting thing that was associated with that is our actuarial study projected that we would have a need in that program of $7.6 million. Based on the information we have available today from the Georgia Department of Labor to fund that program for this year, we're going to need $8.6 million, which is $1 million beyond what the actuarial survey predicted. That's one of the programs that we monitor very closely with the Department of Labor to ensure that we have the appropriate funds in that program. One other thing to note is we cannot, if a program goes negative, in other words, if they go into a cash deficit, we've been advised we cannot move funds between trust funds to shore up other programs. In addition to that, we also have an indemnification program, and in the past we would, and Joe, I don't know if you want to help with any of this, but in the past we would come to you as the legislature and we would ask for funds on an annual basis, and this was the Peace Officers Indemnification Fund, and typically we would request around $700,000 to $800,000 a year. A couple of years ago, the Teachers Indemnification Fund was added to that. You appropriated additional funds to DOAS in that program. That program today has approximately $6.5 million in it. The good news is we've not had one single claim within the Teachers Indemnification Fund. We still have the peace officers claim, and we've not come back to the legislature for any additional funding at this time.
Okay, thank you. You may have dazzled me with your brilliance, but you did not baffle these people here or this analyst right here. I can assure you, sir.
Well, we'd be more than happy to sit down with Lisa and go through any of the detail.
I'm just kidding. Thank you for that.
We've spent quite a bit of time with Lisa on this, and so any other questions that she may have, we'd be happy to address.
Thank you. We do have a question from Representative Houston.
Talking the peace office.
The indemnification program.
Is that what we pay a fee for when you get fined and they charge you a surcharge? Or is that a different?
No, this is different, and this is for peace officers or firefighters who either get injured or killed in the line of duty.
Okay, all right. Let me ask you one other question. On your property, say, example, you have your property insured, all the property that we, who's it insured with?
The state is self-insured up to a point, and then above that we have excess coverage.
Excess coverage.
And we actually have a chart that I don't have with me, but we actually call it the blanket chart because it actually looks almost like an Amish blanket, if you will, in that it's a patchwork of colors for the various carriers in the marketplace. You actually have layers of coverage where the different insurance carriers buy into the first layer, the second layer, the third layer, and provide us coverage beyond our own self-insurance.
Okay.
And so that's a myriad of companies.
In your workman's comp, do your state employees participate in the return to work program?
That is a program that we created and piloted with the Department of Transportation. And part of the legislation that we have pending before the legislative body this year would allow us to make that a mandatory program to apply across the state. That is a great way for us to mitigate workers' comp claims by putting employees back in a capable position, not necessarily the position that they were injured in, but in a productive position back in state employment.
Could you tell me the bill that's in coming for us this year?
Senate Bill 425, I'm advised.
Senate Bill 425.
Yes, ma'am.
All right. How much do you think that'll save the state if we put that mandatory back into the return to work program?
Charles, do you happen to have a figure as to what it's done with the DOT pilot?
No, I didn't. We can research that.
We can get that answer to you and to the committee.
Okay. Thank you.
Uh-huh.
Any other questions from committee members? I do have one question. I have a constituent that asked me about something. I want to ask you why you're here.
Certainly.
It's my understanding that the DOAS handles, I guess through different ways, but also a website, the bidding process for certain jobs, telecommunications or whatever, different RFPs that go out. Is that correct?
Yes, sir. The
Okay.
Georgia Procurement Registry
Okay.
is where state solicitations are posted.
Okay, and her complaint is that it stays behind, that there's still that when bids go on there, even though they have a date that they're supposed to close, that there's no way that they can find out if the job was bid out or if it's still they show that they're closed somehow, but there's no way that they can really find out if there's who it went to, or I think what she's saying is they show closed out as far as the bidding process is concerned, but they're on hold for like in some cases 2 and 3 years because nothing has been done with the RFP or the work that was to be done. Can you comment on that at all?
From a purchasing standpoint, I can tell you what we post and the information that we post. It may very well be that the agency who is responsible for the original solicitation may have some delay in starting the work. I would have to call this particular constituent and would be happy to do so to get the details. But what we do is when we have any solicitation, we use the Georgia Procurement Registry, which is a state purchasing website, to post out to the marketplace. And it automatically notifies any vendor who has signed up to receive these notices. And they sign up according to different product or service categories that pertain to their line of business. And so they're automatically notified whether an agency acting on their own would post something that's within their authority or if it's something that state purchasing would post. And then once we go through the RFP or the RFQ process, our standard practice is to post the results of that. We post the name of the winning bidder, and we typically post the names of those who did not win and the reason for them not winning, whether they failed a mandatory requirement, whether or not their pricing was not competitive, what have you.
I'll get with you on that. I don't normally ask questions about specific constituent questions here, but since this is about the third time you've been in here and I keep forgetting to, I thought I'd do that. But she has some kind of a printout here. I think this is maybe or this may be something she put together, but it shows some bids going back to 2004 that apparently is in the status that she's saying that that they've been closed out, but there's nothing to show that anything ever moved forward with the work.
And we could certainly research it and find out what happened with that particular procurement.
Are there any other questions? I believe that's it.
I've got one other question.
Okay, I thought there might. Okay, just turn.
I'm going back to this audit report again.
Yes, ma'am.
Okay, in this audit report, they tell us about one state that simply changed the way they paid their workman's comp premium that was charged out to agencies. And over a 2-year period, they saved $11 million by just changing the way they billed out their workman's comp. I don't know what it meant, and it said, in contrast, Georgia's workman's compensation increased by 9% where this other state's decreased by 11%. What are they talking about the way you bill out agencies?
Charles, do you want to speak to the mix of premiums and the change that
I
we've
mean,
asked
why
for this
have,
year?
I mean, is this audit not true that we could just change the way we bill out and save that much money?
Let us tell you about the mix between claims history and loss exposure in terms of the ratio between those two criteria that we built on in the past, and then the change that we have requested through OPB of how we would like to do it moving forward.
For fiscal year 09, we changed our mix. We wanted to put more focus on the actual claims expense on the agency. Historically, we've taken 5 years worth of historical averages on actual claims, and we've developed a rate based on 50% of that rate was developed on actual claims experience, 50% was developed on exposure. The exposure is basically the head count for the agency. Mm-hmm. To put more focus on the actual claims expense and to give the agencies, let them know where they stand overall in relationship to claims cost, we've changed that percentage to 80%. So when we prepared our rate for fiscal year 09, we built 80% of that rate based on actual claims experience and 20% of it on exposure, which is the head count at the agency. One of the other things we're doing, and we're talking about premiums here, but there's also a degree of recovery that we're trying to make in the health of the actuarial health of the fund, particularly in the workers' comp area. Historically, in the past, we've billed about $80 million a year, and I don't know that we'll ever actually get back to quite that level of billing, but one of the things that the state should be looking at is how do we return these funds to actuarial health. But one of the things we're trying to do is, as the commissioner mentioned earlier, is the loss prevention control programs, the return to work program, which we're now calling Georgia Focus, which we're trying to address additional areas, and we're also trying to return some of that health to the fund.
But, you know, when you just look at something like this, and it makes it sound simple that you could just change the way you're billing that premium, so this is not...
No.
Well, again, if I may, going back to the chairman's comment earlier, it's not as simple as us just creating the mix. This has to go through a filter. And so OPB weighs in heavily on these types of decisions as they have in changing this mix from 50-50 to 80-20.
Well, I was just reading the audit report, and they had suggested that might be one way. I didn't know if y'all were following up on it.
We are, as this example has cited, as well as the loss control, as well as the implementation of the return to work program, not to mention a heavy emphasis on worker safety training.
So how much, like next year when we come, how much can we expect to see y'all deducting from workman's comp next year? You know, like you did this year, you had little small things here. How many million can we expect next year?
Well, we had targeted to we had targeted to say $4.5 million by June 30th of 2009, and right now my pace is ahead of that. And so I want to see how much further I can get ahead of that pace. And then likewise, if we get a couple more months, I told you about the first 6 months and the fact that claims and payouts are down tremendously, 17 and 32% respectively. If we can continue to stay ahead of that pace and I get a couple more months experience under our belt here with seeing that trend continue, then we will up that target accordingly.
So I'm trying to see one place where we had workman's comp in the budget, and I wanted to ask you, I'm just using that for example because I see workman's comp a lot of times reducing it in the budget. Do y'all see an agency that has workman's comp so I can ask my question?
I'm not sure if they spell it out as a separate line item.
Yeah, they do someplace in here. And, here it is on page 16. On page 16. Line 25.002. All right, and the governor's budget, this is under the Office of the Governor, Workmen's Compensation. The adjustment in the workmen's compensation was $65,000 to restructuring. Y'all see that? So next year, in 09, what can we expect that to be?
Well, that's actually a $65 million increase because of the state of the actuarial fund being underfunded by the $181 million or $184 million that Charles.
This was a decrease, wasn't it? decrease.
Oh, I don't have that document in front of me.
This is $65,000
Oh,
decrease in workman's comp premium because of the rate restriction. What would be the total?
And that's for a particular agency.
Okay, for a particular agency, for the total we can expect, like the office and the governor, this is just for.
The Office of the Governor had a good track record in workers' comp, and they benefited from it. That reduction has to do with the change in the mix to 80% on actual. There are some agencies
Well,
that
you can
cost
change
them
the
out.
mix, but if the agency's not letting the loss down, how does it help?
Well, in
Well,
this
no-
case, it did.
Yeah.
They had the lower losses, and so.
Yeah, but unless we put some of these programs in place to control the losses, changing the mix isn't going to make a bit of difference.
That's right.
Correct.
And so again, don't lose sight of the other programs that we're putting into place.
Okay.
In terms of the safety programs and then the return to work program on a statewide basis.
Well, what I want to know is how much can we save next year? $4.5 million you're planning on saving, or cutting losses by $4.5 million?
No, we were looking to cut losses $4.5 million across all 4 lines of business. And any savings that would occur in the workers' comp fund in terms of lower payouts would be retained for that trust fund because of its status right now being
Okay, I understand that.
actuarially unsound.
Okay. All right. Thank you.
Thank you. Thank you, Representative Houston. I want to thank you for bringing some of that to our attention within the last couple of weeks and getting some information together and the hard work that you've done on that and actually bringing something to the attention of the subcommittee that we need to know about. And I appreciate that and appreciate you coming, and all of you been willing to address these questions and these issues. We appreciate you coming again. I just saw an email here from the governor's office where the governor has lowered the revenue estimate that we're working under. So I don't know how that will translate. We've still got a lot of work to do on this budget, and I think we're going to have some more work to do even on or maybe it will help get the 08 budget resolved. But anyway, I know we've got a lot more work to do now on the 09 before we can move on it. But thank you very much for coming. We appreciate it. Appreciate you answering the questions. Okay, and thank you all. Before we dismiss, I want to ask our budget analyst, Lisa Flashman. She does so much hard work for us. Did you have anything you wanted to bring to us as a subcommittee?
I don't think so.
Okay.
I think we've covered it all. I think we need to figure out if they want $1.2 million in 09, it's not going to come from state funds. They're going to have to transfer it. I guess I was just saying that if the DOAS needs $1.2 million again in 09, which they took from purchasing in 08, they took that amount to cover that, the Senate did, then we're going to have to figure out, either they're not going to get it or they're going to have to transfer it somehow, because I don't know how we would possibly come up with state funds with the budget we're working under to give that to them. I just thought that was an important point to bring up. Well, they took it out, they cut it from administration last year in 08. When they took, I don't know, because I covered everything with them. I asked them specifically, can you transfer money from different programs, and they said no. And then the Senate proposed to take it from the P-card rebates, which they couldn't do. So instead they took money from the purchasing division because they had vacancies that weren't filled, so they could take the money from there. But they made it clear to me that we couldn't do that. So that was my problem with that originally.
I guess really we just, we honored their request or honored what they said.
And we found state funds.
And we found state funds, and the Senate just went ahead and did it. And but the real problem for us, other than the fact that the Senate, the problem that presents for us in the 08 budget was that we had taken funds from someplace. We had taken $400,000 from someplace to put in to shore that up. Then when the Senate did it within that agency and took it from one of their programs and said we're going to take the whole $800,000, fund this with money within the budget, then that $400,000 we put in there suddenly is out in the Senate version of the budget someplace. who knows where, spread out.
Probably,
Yeah, so, I
right.
mean, so it,
It's just
I mean, it
kind of
didn't hurt.
frustrating on my
Yeah.
part when they made it, when they just so adamantly opposed, transferring from any other programs, and it was against their statutes, when clearly they can do it. So, I don't know.
I don't know about you guys, my head with figures, especially after about the insurance, the self-insured is going to boom.
How much was governor's revenue estimate lower?
I have,
245 million in 09.
I'll tell you what, I'm gonna
I
turn
have
off.
an email here.